Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacted mortgage rates, whether it might come from the economic calendar, headline news, or geopolitical. But also, we kind of cover what market sentiment, where good news is now bad news, and vice versa. So, which could be really confusing for a lot of people who might be sitting out there to say, "Hey, we got good news here. Why is the market reacting the way it is?" So, we try to get into that information and provide that for you folks. A little bit about myself is I'm a loan officer. I work with the national lender. We lend in all 50 states. If we could be of any service to you, if you're looking to refinance or buy, please reach out to us. We'd love to be able to earn your business. But more than that, we'd like to be a resource for you folks. So if you guys got questions about anything, please reach out. We're here to try to help you guys out. So without further ado, we'll start off with the economic calendar today. Today is a light day for the most part. On this calendar, we have the 10-year auction, which didn't go well. It was actually pretty weak, so it did hurt the markets a little bit today. I'll touch on in a second here, but there is one report that doesn't show up on my calendar here for some reason. But it's the NFIB Small Business Index. This is a basic index that talks about the optimism for or confidence level for small businesses. This is important primarily because if they're not feeling confident about things, then they probably aren't going to hire, and most jobs are handled through the small businesses. So it came in at 89.5 on the on there, and it's been, as you can see here from this little chart, it's been declining for some time. And right now we're at this level where, the last time we saw it was basically when the pandemic first hit, and then before that, actually right around 2013 range. So just right after when things were kind of warming up a little bit from the Great Recession here. So again, not a good timing. And again, we want to make sure the economy, everybody's feeling confident, because again, if they're not feeling confident, those are jobs that could be lost or not being created. They could be held off from there. So that's sorry about that. So let's go ahead and take a look here at the mortgage. So as I talked about, the 10-year auction didn't go very well. Here's mortgage-backed securities. Here's today. It's at 10 o'clock, and that's kind of when things start sliding down here. This is at 9:40, just before the auction, and here's 10 o'clock. So it just kind of dropped after that, after a weakness there. We were up around 20 basis points. Now we're only up about 3 basis points. So yes, we had better pricing earlier on, but this may lead to many lenders coming in with worse pricing, which would bring us basically closer towards unchanged levels for the most part. So this week, stocks are up so far, but this week we got inflation data, and we also got starting on Thursday. We got Q2 corporate earnings reports, and that's when a lot of the major banks will be releasing their reports here. And so those are two things that they'll be keeping an eye on. Now the big one will be tomorrow with the CPI report. The last one that came in a little hot, and of course it spooked both the stocks and the bond market, and that's when we saw the markets for the most part tank a bit. It took a while for us to recover. I don't know if we're quite there yet, but we are a little bit better than where we were previously, where we have been for a while. So in any case, it did recover some. But again, brace yourself. And then, of course, we have the PPI report on Thursday. And then again, Thursday will be the first day for you'll get like Chase and a few other financial institutions releasing their Q2 earnings reports. So this will be kind of important for investors because they want to take a look to see how much of an impact the inflation has caused for these. For the most part, we know that their profits have been shrinking, but by how much is kind of what they're going to be looking towards. So that will have some impact on the bond market, as well as money flows back and forth between the investment dollars between equities and bonds. So bonds tend to be a flight to safety. So equities, if corporate earnings reports aren't doing so well, money will flow from the equities back into the bond market for the most part in these type of scenarios here. So let's take a look at yields. Yields are also they're up for the day, but lower than where we left off yesterday. So right now we're seeing about 2.96, still below looks like the 50-day and 25-day moving average. We're off, of course, the lows of the day on the 10-year Treasury. The lows so far we're at 2.93, or we'll open at 2.93, but we're touching right about 2.9 about the 2.90 level, just slightly under it. That was our low. And last but not least, let's go ahead and touch on what the average rate is for conforming loan limits. These are based, of course, off of yesterday because after yesterday they are delayed, and they also have points built into them, so that's why you don't see the 8 increments on there. So 15 years now at 5%, and the 30 years at 5.77%. So we did see some improvement there from yesterday's. Of course, that was based off Friday, which we had a big sell. Yesterday we ended up closing up 30 basis points. So, and as you can see here from the chart, remaining above the 20-day or 25-day moving average. Right now we're kind of sitting between the 25 and the 50-day moving average on the chart here so far. All right, again, brace for tomorrow. We'll hope to see a tame report tomorrow, so that way the markets could both be settled and hopefully not deal with any drama. All right, folks, thanks so much for watching. If you guys like this channel or liked these videos, please help us out and smash that like button. And again, we're here if you guys got anything, any questions we can help you out with. Take care. Have a great rest of the day. Bye-bye.